In a week of ironies, the Philippine market suddenly turned sour. Just like that. Why? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. Last week started with the US inflation data. CPI came in at 2.7% in line with expectations, but core inflation moving up to 2.9%. A lot of news seem to be blaming this on Trump tariffs, with focus on furnitures, which shot up 1.3%. But ironically, look at the top drivers here. They weren't really tariff related. I mean, auto insurance, rent, tuition fees. Producer price index remained steady, which also ironically shows some marginal effect from Trump tariff measures so far. And while inflation numbers were up, retail sales surprised to the upside, surging 0.6% in June, a major reversal from the negative 9% last May, indicating robust consumer spending, more than expected, right? Despite the price increases. This fueled the S&P 500, launching the index into new highs last week, reaching the 6,300 level. After so many attempts, the market tried its best to close positively on Friday, but finished just below the mark despite setting fresh records, right? Meanwhile, as the US-China trade wars have stabilized in the past few weeks, with NVIDIA resuming sales of its H2O chip to China, you would think the Chinese exports would have suffered starting Liberation Day, but more ironies, as last week's balance of trade numbers showed a surplus of 586 billion. Exports rose 5.8% in June, while imports rose 1.1%, growing for the first time since February, although shipments to the US declined 16%. Chinese companies managed to offset the decrease by boosting their sales to other markets. Now, according to the World Trade Organization, Chinese exports to the US is expected to drop by 77%. And to counterbalance this sharp decline, China is expected to significantly shift its exports towards other regions, particularly North America, excluding the US, maybe Canada, right? South America, Asia, Europe, and the Middle East. Now, charting the performance of the top 50 stocks in the S&P 500 with the greatest international and domestic sales exposure also shows the irony here, right? That tariff effects seem to have been shrugged off, as these stocks have outperformed the S&P 500 since Liberation Day. Now, despite notching all-time highs last week, the S&P 500 wasn't the top performer. Southeast Asian markets staged a comeback, with Thailand, right, Singapore, Vietnam, Taiwan, the Hang Seng Index topping the list. Now, Philippines ironically performed the worst, despite having one of the lowest reciprocal tariff sanctions from the US, and despite us sending a negotiating team to the US. The PSEI fell 2.38% on the weeklies in a sudden turn of sentiment that plagued the local markets last week. So I was getting messages left and right last week asking me, why did the markets turn sour just like that? Did Plus drag the market down? Why is the market down? And of course, a lot of the news cycle was blaming it on US inflation, right? Inflationary concerns in the US and strong retail numbers have bolstered the Fed's rate cut delay, right? With the July probabilities now almost a certainty, and the September probabilities of a rate pause here climbing to 40%. This was 36% last week. This has pushed the US 10-year Treasury yields significantly up in the past weeks, with the 20-year yields again breaching the 5% critical level last week. Now, looking at the US-Philippines 10-year spread, right? The spread has widened in the last few weeks, with the local treasury yields remaining steady in anticipation of 2 more rate cuts this year. As a result, not only are we the worst performing market, but the peso was also the worst performing currency last week, with the peso sharply depreciating against the dollar, plunging almost 1.3% as we saw massive outflows to the more stable US currency, especially after the BSP expressed its willingness to tolerate the peso sliding to a 10-week low, describing intervention as futile in the face of safe haven flows, right? Now, a large part of the money flow, the money outflow, is probably because of the significant block sale from an undisclosed institutional investor of shares of SM and SMPH. These sales total around 12 billion pesos, right? And are being offered at a discount of 3.9 to 5% from recent market prices. So this major transaction caused SM share price to gap down last Wednesday, falling 8% last week, almost hitting the 61.8 fib support. But I guess a lot of people got out before all this hit the fan. Now the next level of support could be at 780 or a potential gap fill here at 750, right? We'll see what happens. Meanwhile, SMPH also gapped down last Wednesday. It failed to break the resistance level at 2550, and at this point, as expected, SMPH might need another cycle around the price band of 2180 to 2550 before we will know if a breakout could be viable, right? So let's look at the charts. SM and SMPH are the top 1 and 3 index heavyweights respectively. And what happens to them happens to the index. The local markets turned sour last week, also plunging below the key support area and then hitting resistance here to end the week at 6,300, right? Now, if we draw a Fibonacci retracement here, we can see that the 6,325 level here was a key support area, which converges with this horizontal support. So the breach here may take us back to 6,200 if this level, right? So guys, this level is the last line of support. If we cannot hold this week, then it's 6.2, right? And of course, the major news event for last week was DigiPlus, with a 63% drop at one point before a massive 65% recovery last Friday. So after it breached the 20 VWAP level, it hit the next VWAP level at 1374 before a comeback pushed the stock up 15% towards day's end. So is it time to buy DigiPlus, right? Technical wise, it hit a massive support zone, bounced off of it with heavy volume. Potential gap fills here, 28, 34.75. What to look out for? A follow through day. If it follows through, then it could be a good bounce. But guys, you never know with DigiPlus, right? This is really not for the faint-hearted. Make sure you have BP if you want to trade plus. And BP does not mean buying power. BP means a BP monitor. You need to have a blood pressure monitor if you want to trade plus. But you know what? There are a lot of other stocks in the market that does not need a BP apparatus. Let's look back at our trends with benefits last week. So we mentioned to monitor the stocks, and we mentioned look for pullbacks on these stocks. So did you? So let's look at what happened, right? So for SM, of course, failed setup. Ali did not hold the 20-day EMA, but it almost touched the 50-day EMA and the 0.5 Fibonacci level here. A follow-through day could confirm this bounce. But I mean, SM, SMPH, right? These are discount opportunities for these stocks, right? So monitor their support levels for good entries, especially for long-term investors. We have RLC. We mentioned a pullback here. Could be a good chance to enter. pullback and the bounce. Congratulations if you were able to pick up some RLC shares. A REIT also presented a brief window of opportunity to buy at 40.50, right? Congratulations there. RCR also, I mean, this is called a pullback in time, right? So instead of pulling back like this, it just consolidated here until it reached the 20-day EMA. Boom, up 5.5%. Again, congratulations to those who were able to get RLC. Phil REIT also, it ended last week here. A pullback here, a good opportunity to enter. Congratulations. There also we have Manila Water, right? So Manila Water, well, it breached the 20-day EMA. This was actually a good opportunity to buy, but again, I'm looking for a follow-through day here. Let's see if Manila Water can hold this level. As you can see, it's easier to bet on stocks with the least resistances. Let's also look at some notable pullbacks last week. Now, GT Cap, we mentioned to wait for the pullback. So this is a bullish pullback, a bounce off of that, a good chance to enter GT Cap. And then we also have Monde on the upper range last week. It failed to break the resistance there. It went down to 750, bounce off of that. Will the 100-day and the 20-day EMA hold and push Monde back to 815? We'll see. So Monde on a streak lately. Let's see what happens. And then we have URC, right? So URC, we have been waiting for this. Monitor if this bounces, if you want to enter. But of course, the average price target from analysts is just at 100, 105, around this level, right? It corresponds to this consolidation area. So maybe not a lot of upside, but with the technical structure here, maybe it could still push back to 114, 119. Let's see what happens to URC. Aboitiz Power also pulled back to the 20-day EMA. Look at the pullback here. It went up, pulled back, bounced off of the 20 EMA, right? Congratulations if you were able to catch this. Hopefully this continues to 43 and then 44. And then we have STI. Lately, there have been some hate for Yossi Tanco stocks. But STI holding above the 200 EMA. This has happened before. Wait for the consolidation here, right? Wait for the consolidation here to confirm if this will hold. While these setups looks good, remember the index might still be headed towards 6,200. So even though it may mostly be SMPH, right? This reflects broader market sentiments. So some of these setups may actually fail. So proceed with caution here because market sentiment, as you've seen here, is still currently working against us, right? So why is the market so bad? Is it because of US inflation leading to higher US yields? Is it a sell-off on index heavyweights SM and SMPH? If it was US yields, if it was a flight to the dollar, why did the flight to the dollar only happen to the Philippines? Why not also Vietnam, Thailand, Singapore? So why is it just the Philippines? Is it because of SM and SMPH? Because look here, there's a bandwagon effect. Now, even other index issues went down. And this is on the weeklies. There are 30 index names. Only 6 made a slightly positive week last week. So the question here right now is, did Plus drag the market down? In a way, yes. DigiPlus dragged the markets down because, okay, this situation simply highlights how risky it is to invest in the Philippines, right? Because the rules seem straightforward, right? You secure a license, you are allowed to operate, but mid-operation, the rug gets pulled out from under you. This kind of unpredictability sends a clear signal that the Philippines has become increasingly uninvestable. Can we really blame foreign investors if we are at the bottom of their priority list? Now, while the issue centers on the gambling sector, it has broader implications. Gambling may be controversial. It has its issues, but technically, it is still a business. It is still a legitimate business. When investors, foreign or domestic, see a government that can suddenly change the rules, it erodes confidence, because stability and consistency are essential in any business environment, and this incident undermines both. What happened to DigiPlus doesn't just hurt one company, it casts a shadow over the entire market, and it might continue to cast shadow on the markets. Looking at the calendar here, July 25 to August 1, possible PSE announcement dates for index rebalancing. And the question right now is DigiPlus still eligible to enter the index given everything that's happening to it? August 8 or August 16 would be the possible implementation dates of this index rebalancing, but before that, right, July 28 would be the start of the 20th Congress, where they will elect a Senate President, they will elect Speaker of the House, and will culminate in the President's State of the Nation address. So we will see if online gambling will be included in the President's top priority bills for the 20th Congress. A lot of uncertainty going on in the markets. We'll see what happens, right? So that's it for this week. Please like this video if you found the information. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. Remember, don't go to a Coldplay concert if you're having an affair. And I'll see you again next week. Bye-bye.